Good afternoon from the floor that see me. This is Chris Robinson with your Traders Exclusive comment this week. Today's Thursday, the 21st. Tomorrow, got to focus on two items today, and then I'm going to hop real quick. Number one, I want to talk about corn to start. We've got options expiration tomorrow in October options. There's a lot of options right around the 350 level in December corn. I would watch that area critically moving forward. There's a lot of open interest there. Typically, we'll hover around that level, but it's a good setup for next week's trade. Once those options expire, then lots of times we'll have a kind of a relief move, either higher or lower. So the fact that these options are expiring are setting up both hedgers and speculators for a good opportunity for a move. So the level I would watch, it would be December corn at 350. I would watch the 960 level, 950 level in November beans. And as far as Chicago wheat, I would watch the 450 level. Those are key areas to watch as options expire. Again, it's an opportunity for movement. There's no guarantees, but it's an opportunity for movement. Typically, the day after the options expire, we'll get a pretty substantial move sometimes. So I would look at that. The second thing I want to talk about is cotton. If you've been watching cotton and listening to me, we had a very big move up on speculation that we were going to get big yield drops due to the hurricanes. The managed money took their position from long 20,000 contracts to long 70,000 contracts. Lo and behold, the Irma did not do as much damage as people thought, so you had these guys trapped at the top. After a $10 rally, we dropped $7.50 very quickly. We kind of sat there for a while. Today, as I'm talking to you, we took out very key support at the 69-cent level in cotton. A lot of people were watching that as support. That has failed. So now you're in a situation where the managed money is long. They're kind of like Wile E. Coyote out there in the middle of nowhere with no support. So they have more to sell. Them selling could definitely push us lower. It's no guarantee we're going to go straight down, but the impetus you would think would be for continued move lower until these guys get out of that losing position. So there's opportunity there in cotton. The last thing I want to talk about is cattle. We've got a cattle on feed report tomorrow. If you look at the charts, we've had a tremendous rally, a $20 rally in feeder cattle, a $10 rally in fat cattle, which is the live cattle. It's all set up for another number tomorrow. We've got a cattle on feed, which is a supply number. The estimated numbers as they are now suggest that we're going to have the largest number of cattle in the pipeline that we've had in 5 years. If that comes true, we should see some price pressure. The interesting thing is, though, the managed money has really pushed us up. If you go back and look at a chart of fat cattle, we started the beginning of the year at like 98 cents. They take us all the way up to 120 a while ago. We've come back down. We're at multi-month highs here today as I speak to you. We're moving a little bit lower, so we're up against resistance. We've had a $10 rally. It's a good setup for either a correction lower on Monday if they don't like the numbers that come out in the cattle on feed, or it could just be another excuse for the managed money to buy more. They may get a hold of this position and continue to buy it. Fundamentally, it doesn't really make much sense to be at these prices. You've got the cash market trading at lows, about $1.06, but you've got the futures market above it. So that's the third thing I always look for is a disconnect between the cash market and the futures market. It gives you, again, what are we looking for? Opportunity. That's the three things I wanted to cover today. Have a great weekend. If you're looking for help, look me up on the line. This is Chris Robinson. Have a great day.